Hey everyone, welcome to this new video on Grasim Industries. This is a very unique company because 75% of the revenues is actually coming from two of its listed subsidiaries, and only 25% of the revenue is coming from its actual operating businesses, right? So, and both of those, when I talk about those listed subsidiaries, it's Ultratech Cements and AB Capital, Aditya Birla Capital. So it's very interesting in the sense that this is a holding cum operating conglomerate company, where if you're liking some of the segments, you can actually invest in these companies by themselves, right? So it's very interesting to judge whether you would want to maybe invest in a company like Grasim Industries just because of its very unique, diversified conglomerate nature. But of course, we'll try to learn more rather than this being a investment decision video. Um, the story of the company is very interesting. Yes, it used to be, or it is still 50% of the revenues are coming from cement. But this is changing, right? Um, Almost from being 60% a few years ago, you can clearly see that cement is losing its grip in terms of the mix, in terms of the revenue mix. And what is going up, if we see the other standalone businesses are going up. So yes, 75% of the revenue is from these listed subsidiaries, but Grasim Industries has gone into two new businesses which are already scaling and which already have almost 10 to 15,000 crore um, thousand crore revenues already, and you can see the growth which is happening in these standalone businesses, right? As compared to the 18% growth overall, right? So definitely there is a story playing out where this is kind of reducing its dependence from cement and transitioning it to these other businesses. And these two businesses would be your in the paints industry. So that's your Birla Opus paints brand, which they have launched. And they've also launched a B2B e-commerce platform, which is called Birla Pivot, which has also hit, I think the revenues are not available, but Birla Opus and Birla Pivot both have individually all reached almost 14 to 15,000 in revenue. We don't have the latest financial year numbers here, but that is the story of this company. Yes, it's a holding company, but it's aggressively expanded into the paints industry. And then it also has this B2B kind of e commerce arm, which it's trying to scale and trying to grow. So that is what makes this company very unique. Is it a strong moat though? The answer here is it's a narrow moat, and also it's a weak categorization inside that narrow moat. The main reason for this is that the ROCE isn't reflecting the ROCE isn't at a level which reflects the a company which has a moat. A return ratio which is tracked 18 to 13% across the last 10 years against a weighted average cost of capital of almost 11 to 12% doesn't show that it has consistently, it's not the characteristics of a moated company. So the answer was almost no moat, but just because in cements it is the largest player and it has some cost advantages, the verdict was changed to narrow moat. But yeah, it's definitely not like if you want to buy quality and buy a moated company, this wouldn't particularly fit um, in that category, right? So we'll discuss a few more things about Birla Opus. I'm sorry, Grasim Industries. All right, next we look at the quarterly score, and it got a really good quarterly score, almost in the top 75 percentile. which is a really good score. Also a big improvement on its previous quarter. Let's find out why. What happened in Q3 FY26? Yes, the numbers were great. 25% revenue growth, 33% EBITDA growth. Paint segment was great. Okay, numbers looked great, right? What's really happening is that in terms of its two new offerings, Birla Pivot and Birla Opus, right? Both of them are performing really well. Birla Pivot has already reached an ARR of 8,500 crores, right? Way ahead of its FY27 is so the FY27 guidance, which they have already achieved, right? Now they're expecting it to break even by FY27. In terms of Birla Opus, they've reached a milestone of 500 million liters of cumulative sales. They are taking up market share, 300 BPS of revenue market share year on year, also growing 3x the industry rate. So there's a roadmap. Looks like they are going to reach their target of 10,000 CR revenue by Q4 FY28. So this is the story behind the numbers, that both of their new segments are looking really good. And on top of that, what's happened is that the balance sheet, right? Their leverage has come down from 1.77 to 1.57, right? So if you look at their leverage, which is the net debt to TTM EBITDA, it's gone up from 0.39 to 1.77 at the peak, but now it's coming down. So the management guided to like, okay, it can go up to 3.35x, but it didn't go up to that. And now it's looking like it's going down. So this will be a key metric to track. But as the revenues start coming in, as the EBITDA starts coming in from these two segments, this number should go down. So all the capex which went in the last few years, all the leverage that they took, looks like it's paying dividends now, and the numbers are kind of reflecting it, right? So that's the quarterly story. There are some other key variables about their cement business and about their this textile businesses, but I'm not going to go into too detail of that because we're kind of tracking the major story of this company, which, as I said, is the pivot from kind of cements to these two new segments, right? Next, we look at the growth and guidance of this company. So what are the growth catalysts of this company? The top growth catalysts, right? One is obviously the Birla. We already know the story, right, of this company. They've expanded into the paints industry. It's been a huge capex. It's been a huge distribution setup. They're trying to gain market share aggressively. The growth, the targets are there of 10,000 CR, right? So this is the direction, the biggest growth catalyst, which is going to play out in the next 4 to 8 quarters as well. They want to be the number 2 profitable position within 3 years of full scale operation. Yeah, so they've also increased the prices recently. So that'll be really good to track in the coming quarters what happens to this market share expansion, right? In terms of the chemicals, they're transitioning to, there's some commissioning of plants happening, but I'm going to skip this one and go to the next one, which is the Birla Pivot scale to profitability transition. So now the target is to make it profitable by the next financial year, right? So these are the catalysts which are also coming up in the top 3 growth catalysts of the company, right? And the scenario analysis which is coming to us is, yes, there could be a base case growth of 12 to 15. So double digit growth for a Nifty 50 company is, I would say, it's not bad. So yeah, this is what the growth capacity, growth story is looking like. Again, playing into our narrative of the story of the stock. In terms of guidance history, again, the story is reiterating. The big picture target, if there is any, there's one, is that they want to reach 10,000 crore revenue and a profitable. It's the same thing as what we saw previously. In terms of its guidance credibility, the management has been given a credible rating. They have beat their their previous FY25 guidance. In terms of FY26, it's been upgraded. Let's see what upgraded. The B2B e-commerce revenue guidance surpassed earlier than expected, with management now noting they will hit the target well ahead of FY27. So yeah, that's what they've consolidated revenue, standalone business now at annualized revenue run rate of more than 40,000 crores, right? So this is what we need to track, the standalone revenue of this company. Again, the same things are coming up. Birla Pivot to hit break even now by FY27. That's been tracked. The cement capacity, this is the Ultratech cement, right? So this is what this company is. The story is very, 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 very clear to us. Yes, this is a company dominated by its holdings, especially Ultratech Cement, which is the largest manufacturer of cement in India. But they also have two interesting new plays. Well, they're not new by now. They're already earning thousands of crores in revenue. But seems to me that that transition is playing out very well in the numbers. The leverage hasn't gone crazy. So yeah, that's the story of the stock.